Hi, it's Thomas Cook from Toronto's real estate team at RE/MAX, and here's our February 2013 Toronto Real Estate Market Report. February numbers are about normal for this time of year, but the stats show we're just barely into seller's market territory. We're going to talk about what's occurred in the January market, plus some scary new condo construction stats as we go through this month's report. So, let's review some of the Toronto Real Estate Board statistics. February MLS sales totaled 5,759 houses and condos in all the districts. This sales number was about average for the month over the last 12 years, but it was 16.3% below 1 year ago. Condo townhouses and high-rise suites maintained a 31% share of the market, with 1,363 units changing hands. The February average sale price came just about $510,580. Just 1.6% above 2012. East of Yonge and south of Bloor in the CO8 downtown Treb district, the condo sales price average was $372,000, while west of Yonge and CO1 the average was $421,000. I'll give you more condo market details in just a few minutes. As you can see from this Toronto Real Estate Board monthly sales graph, February sales are down substantially compared to the previous 3 years. The active listing inventory is one of the strongest indicators of how smooth or outrageous the market's going to be. We're back to an average level of inventory for the month of February, although we're up almost 10% from last year at this time. The sales to listings, or percent chance of selling ratio, is how we determine what type of market we're actually in. 24 to 28% is a neutral market, below 24% is a buyer's market, and above 28% is a seller's market. In February, that ratio finished at 36%, down 11% from last year, but more normal, and now into moderate seller market territory. Mortgages are still very affordable, and the 5-year fixed-term rate is around the 3% mark or lower. That means a monthly payment on a $100,000 mortgage with a 25-year amortization is just $471. BMO just came out with a 2.99% rate this week to stir up the market a bit. So, we've got good inventory, moderate sales, moderate average price increases, and excellent mortgage rates. This is all good news for first-time and move-up buyers. While the overall Treb average dropped to 28, the days on market number for downtown condos east and west of Yonge were 27 and 32 days respectively. Much better numbers than in January. Detached Toronto homes were selling faster than in January at 27 days on average, and more affordable semis were moving in a quick 18 days. As you can see from the graph, the February average home price was again up from last year. This continues the trend that we saw completely through 2012. The only unknown is the state of the downtown condo market, especially going forward into 2014 and 2015. Fewer first-time buyers and investors has caused the downtown Toronto condo market to slow, with sales numbers both east and west of Yonge down from 1 year ago. Both of them took a hit, with 28 to 31% drop in units sold. Condo average sale prices were down 1.3% year over year in CO1, west of Yonge and south of Bloor, and down 8.2% in CO8, east of Yonge and south of Bloor, compared to 2012. Listings, however, were up 7.5% to 10% from February of 2012. We also saw the ratio of sales to listings in CO1 edge upward to 21.6%, while CO8 east of Yonge moved up almost 8%, ending it up at just under 30%. This left CO1 still languishing in buyer market territory, while CO8 moved into weak seller market territory. Just recently, Barry Lyon Consultants did an update on the new construction market going forward. I first looked at a graph not displayed here, showing the differences between new construction in the 905 versus the 416 areas. It showed that the vast predominance of new units were being built in the 416. Now let's look at this particular graph. You can see that the vast majority of new condo suites built between 2006 and 2011 are in the old city of Toronto. So now let's go to the next slide. Here's where it gets scary. If the majority of new units are being built in the old city of Toronto, and in 2014 there are expected to be over 47,000 condo suites available for occupancy, do you see the problem? That number is almost 3 times the previous high of 16,300 completions, which happened in 2010. There has been a substantial differential in the per square foot cost of new versus resale, with new always being higher. This upcoming glut of inventory doesn't bode well for investors who are hoping for substantial appreciation from their original builder purchase price. The good news is, for condo buyers in 2014 and 2015, prices should be down significantly for brand new product. Current resale condo owners who've owned for a few years should be okay, provided they're taking advantage of mortgage prepayment privileges to pay down their principal balances. So, how do you decide if this might be the right time for you to step into the market? The first big step is to go on a market experience tour of condo or house neighborhoods with one of our team members. What it's not intended to do is to find you your dream home. What it is intended to do is to give you a clearer idea of what's available on the market in your favorite parts of the city and in your price range. Once you've had your tour, you'll be better able to make a smart decision as to whether now is the right time for you to consider moving towards home ownership. You can sign up for your condo tour at dailydowntowncondotours.com and a tour of houses at dailytorontohometours.com. That's dailydowntowncondotours.com and dailytorontohometours.com. So, all the best, and check back here in early April for our March Toronto Real Estate Market Report.